Last week, we closed on 3 sourced apartments in Business Bay, Dubai. Overall, that brought in savings of 900,000 dirhams in total. And by the way, before you tell me that the market is going down and so on, which by the way, I agree, that's exactly why we did this savings number is based on real market data on average in that specific tower, specific timeline, and in the last 1 month, which means the value of these apartments is at least 300,000 dirhams over what we ended up paying. This happened during one of the most uncertain geopolitical moments in this region, and that uncertainty created this opportunity. For everyone who knows me, you know that I sold most of my units last year, and perhaps you thought that I'm exiting the market or just waiting until something happens. While I didn't expect that this would happen, and I'm sure none did, I was ready on the sidelines together with my co-investors. That's exactly why at the right moment, we acted. So in this video, I'll tell you exactly mine and my co-investor strategy to get back into the market, and more specifically on our first 3 units source out of 27 planned in the next 2 years. With that being said, I thank you for being here and for watching during these uncertain times. Your support means a lot. I started this channel to just share my experience as an investor here in the UAE, but also all over the world. I genuinely love sharing content and my experiences and my clients and co-investors and partners experience here on the channel. So if you do like this kind of content, please don't forget to leave a thumbs up button and subscribe. It really means a lot. So now let's get into the video. First, let me give you some background on what is this sourcing for. If you already know me, you know that I'm sourcing deals in this market and advising clients via my advisory company, Agora Advisory, on the best possible scenarios. With this sourcing, we started building a 27-unit portfolio for one of my long-term advisory clients, now also a co-investor alongside me, so not only in the UAE, but also in other countries. We planned this quite in advance and actually before all this madness started. Fully aligned capital and, most importantly, a very long-term horizon. So not only a quick flip and also not a short-term play. To be honest, we planned this portfolio construction many months ago, actually back in 2025. We had no idea that this kind of stuff is going to happen. And to be very transparent with you, I was also hit in February and March, so I was expecting that my business will die. Then I remembered that long-term everything gets back to normal. And by the way, I'm not saying about 3-5 years. I'm speaking really long-term, 10, 15 years, 20 years. When you look at this kind of long-term horizon, you always know that even when you check the stock market, even if you bought at the highest highs or sold at lows and did everything wrong, but you just kept it long term, you would still be making money as long as you hold and plan it strategically, allocate the capital wisely, and hold it for very long term. It will always play out for you. In this specific case of the portfolio building, we actually didn't even target capital appreciation. We initially targeted just net yields, which is why the sales that happen now, the discounts that are popping up, is just an additional bonus. Let's get to the core question. Why now? And emphasize a bit more on the US-Iran escalation effect. The US-Iran war escalation definitely affected investor perception. It slowed transactions temporarily, that was expected, created emotional hesitation, and increased negotiability. So I'll cut the chase and say that for short-term investors, it's probably risky. However, for long-term capital, this could be an attractive entry point, especially if you're focusing on yields and you're just buying properties in those areas where you will have a tenant anyway. I mean, the same kind of effect happened not only in real estate, it affected the car sales, furniture, and other distress assets. This is a broader cycle behavior. For investors, what matters the most is to be liquid in this kind of cases and be able to act accordingly when an opportunity comes up. And that's exactly why I'm not stopping making videos in this kind of period, because I'm not an agent, I am an investor myself, and I will continue looking at the markets, analyzing the trends, and telling you guys and to all my clients, my partners and friends when there is some opportunity and where there isn't. But let's get to more details and tell you exactly what was our strategy framework and what we were targeting. First of all, only ready properties. Because, like I told you, we were targeting yields at the beginning, not capital appreciation. And you obviously can only have yields on rented properties which are ready. And to be even more specific, we were mainly looking at one-bedroom units, so that is scalable, it's replicable, and honestly, I've done it myself. I shared it multiple times on this channel. I even disclosed my real unit, so you can watch some of the videos from past summer, and I know it works, and it will continue to work, because comparing to all the Western cities, even right now with everything happening, it's still working out. It's actually quite crazy to accept this. But let's not be emotional. Let's really look at the numbers. What we were targeting was 8% net yield. This was our target. And to be even more open with you, we were only looking at cash purchases. Because if you want to act quickly to get a best deal, this is mainly for cash investments. So to wrap up, one-bedroom units, salary-driven rental demand, which obviously will rent out. Even if it's lower, it will still rent out. Preferably furnished, or we would furnish it afterwards and have it all done in cash so that we hold the negotiation power and move it very quickly. An important disclaimer is that mortgage buyers, unfortunately, can't really replicate this. So I'm sorry for anyone who's watching and wants to get in this kind of deals with a mortgage. I don't really think this would be as possible nowadays. However, I'm more than happy if you prove me wrong. In our case, this kind of discounts were only possible because we were cash buyers and we had speed, no bank delays, no valuation risk, immediate execution, and seller confidence. They were accepting it much quicker than if we were with a mortgage. This does not really apply to heavily mortgaged buyers. However, we need to understand that also when you get it with a mortgage, your ROI will be higher if you just simply rent it out and hold it as an investment long term. So even if you wouldn't get such a good price or have this big, large margin for the capital appreciation, you would still most probably get a very appealing net yield. So yeah, overall, you might not save 900K on 3 units, but you would definitely see some really good rental yields and maybe even higher than these ones in cash. Now, how did I find these deals? Honestly, we weren't browsing listings. You can do that, and this will give you a very good high-level perception of what's happening in the market. However, we were positioned early and ready to act upon when we find something off-market from my private network, distressed secondary sellers, or someone moving out. And by the way, not even because of everything happening. Maybe they just start living Dubai. This happens as well, just because of moving to another country for a new job. But it could be just also because of this. Timing for this kind of deals also works for us in this kind of uncertainty. And last but not least important is that it was a bulk deal for 3 units. Now let me tell you about the negotiation tactics that were happening and why it probably made this deal much smoother than it would have for someone else or in some other times. Obviously, you would expect to negotiate, especially in more uncertainty or uncertain times, so you would most probably have offer below asking price. You need to have a solid proof of funds ready to act upon, so you need to have the checks ready to put the down payment or the deposit, the 10%. And of course, using the bulk deal as a leverage to buy out a seller who probably will prefer someone who just gets everything at once, works only with one buyer, with one agent, and it's done much smoother without any kind of bank involvement and so on. Honestly, it's kind of a win-win for both parties because we as buyers, we also didn't really want to work and check and do due diligence for all kinds of units from different sellers, different agencies. That involves much more costs even because you can even negotiate that to the smallest details. And if we speak about the actual breakdown for these units, let me tell you exactly where the 900k savings was coming from. When comparing to the last transactions in that specific tower in Business Bay for 1 bedrooms at that floor, the sales in April and March, which were the most affected months, were still at around 1.15 million dirhams. That's compared to last transactions, real data recorded in DLD and DXB Interact. You can check it yourself and even compare it to the average price per square foot in Business Bay as a whole. To be honest, if we look at that, the savings is much higher. But both for me, for my co-investors and partners, I try to look at the most pessimistic scenario. So this pessimistic scenario still gave us 300k savings on each unit because we ended up purchasing those for 850,000 dirhams each. Now I was thinking, what could I do to give you even more value, better breakdowns, detailed analysis, so that you can finish this video and really get a lot of useful and applicable information right away, but also to be fair and transparent about my own time and involvement in this, to be able to cover the costs for my employees, production, and time that I put in this because I really love it. I will be soon introducing something new and exciting on this channel. Instead of a pre-filmed course or whatever it's used by so-called investors and fake coaches, I thought I'd offer general memberships on the YouTube channel so that you have early access to content, advanced in-detail investor insights, portfolio case studies, and most importantly, member-only videos where I'll show the full breakdowns of what I'm doing in the market. If you want to see the full breakdown, including the exact purchase price and even proofs, market comparables, yield calculations, and the overall cost breakdown on every single thing. Moreover, 5-year projection models that I was doing because I have a finance major, so I was doing it for over 10 years for myself, and now I'm doing this as part of Agora Advisory. But if you are not interested to become a client or still considering but not ready to invest, this is the chance for you to get more useful, applicable knowledge. Memberships will hopefully help support this channel and allow me to create more in-depth, transparent breakdowns. At least I'll test it out and see if you guys like it, and of course I'll listen to your feedback and make it worthwhile for you. So stay tuned, it's gonna come up on the channel very soon. So back to the video, who's this strategy for? Definitely long-term investors and specifically cash buyers. Yield-looking portfolios, so for someone who's actually interested in investing, making it a rentable apartment and collect the cash flow. And of course, people comfortable with temporary volatility. Now to wrap it up, let me give you a larger investment insight. As a macro takeaway from this investment, you need to understand that geopolitical events and fear creates mispricing. And to be honest, I was saying this on this channel even before. Ready units were already much better priced than the off plans, and there is a big opportunity in working and investing in this kind of units. If you have liquidity, patience, risk tolerance, and a long-term view, these periods become entry points. If you don't, well, they will become stressful. So yeah, overall, really happy with the first 3 units out of the 27 that we planned. And that's a pretty fixed number because we're looking at a specific overall budget. However, a more interesting point, which I will definitely disclose in the members only video, one of this unit is already tenanted at 80,000 dirhams, which already creates a over 8% net yield. Most importantly, the tenant will actually renew the contract. However, for the other 2, we have a completely different strategy in mind. So I'll break down the full numbers, yields, and transaction comparisons, besides, of course, all the associated costs in the upcoming members only video. Again, as mentioned, I put a lot of effort in these videos and I really hope you find them useful. And if you want to support the channel, it will be an honor for me if you will decide to join the membership. And I hope to make it worthwhile for you and you'll find even more insights that that are applicable to your own case, not only in the UAE, but also in other countries. So with that, I thank you for watching this video. Hit that thumbs up button if you really liked it, and drop all your comments below. I'm really curious to find and to hear your stories and opinions. And with that, I will see you in the next one.